Per usual, living on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some legacy charts for Macro Monday. I'm certainly not bullish, but the flows do be a flowing here. Globally, ETP flows a record high for the week, 3.85 billion, in large part because ETH has finally seen some flows here, 1.15 billion on the week, even XRP, 134 million. Sol negative on the week, and you're seeing that certainly in price action. Sol ETH, Sol BTC turning down. Bitcoin, obviously, the leader of the pack here, but if you're bullish ETH, this is something you'd like to see more of, just flows into ETH passively, where there really haven't been much of anything going on over the past year. It's not too long ago, as in a couple weeks ago, ETH was flat on the year. So I do like ETH as a setup into 2025, but it's good to see flows picking up there. Looking at VLO data, CME annualized basis is quite high. So there's a lot of speculation, a lot of speculative fervor on the futures side. The question is always, okay, is it too hot, right? Is it too much? Does this have to pull back? Is it screaming? Is funding too high? You can see ETH there got up to 20%. ETH OI, huge increase there. Now, is somebody going to come and arb this is another question, especially on the ETH side. Not all flows are net long flows. This is like caveat. It's just, there's a lot going on here because it's not as simple as buying the ETF and that's it. This is a multi-strategy thing now. And with BTC, we've got options as well. So it's a lot of stuff going on with the ETFs, but it's good to see open interest. Again, I'm not concerned. Tons of people just continuously talking about open interest. Until we have 5 ETFs, 5 single asset ETFs, multi-asset ETFs, and then options on all of those, I don't think we have any clue where open interest is going to go. Now we could say on a relative basis, open interest is super high. We just looked at the ETH version. Open interest on ETH is at an all-time high for CME, I believe. Yeah, massively. But this is what you want to see. You want to see people coming in and doing anything. Literally doesn't matter. Shorting, longing, whatever. You just want to see activity. You want to see people getting comfortable with the asset from an institutional perspective. So that's good news. Now, that's kind of where the good news stops. For BTC, I'm certainly not bullish here, but again, it doesn't have to break down. This can just chop from 90 to 100 for the rest of the year. That's totally fine. There is a potential gross looking ascending broadening wedge, not a rising wedge, but an ascending broadening wedge that does have a bearish probability that matches the daily Kijun, but is this a short per se? I don't think it's a great setup for a short, but it's not a great setup for a long either. So like I said last night, there's kind of not much going on here. Low time frames has this inverted Adam and Eve characteristic that's certainly not bullish and would point us to the 90s, which would bring us to, the bottom of this wedge thing, the top of the 8-hour cloud, right? It's just very difficult to, in earnest, say what's going on in either direction. Just lots of chop. We have hit the multi-month target based on the fibs. So how much more can we really expect here is the question based on technicals. It would take something more than technicals here to push us higher. It would take Mag 7 buying BTC. It would take QE over QT. It would take rates continuing to come down. It would take dollar weakness. It's going to take a lot of things to push us higher quickly. It's easier for some consolidation up here, maybe to the end of the year, into Q1. Nothing crazy. We just sat through 7 months of absolute brutal chop. So what's another month of whatever is going on up here? But we certainly don't want to lose the Tenkin, which we're trying to do today, because if we do, we risk a deeper drawdown. So if I had to bet on anything today, if you said to me, Josh, I have to make a trade today based on something, it would be to the short side. It would be just sitting in cash and waiting, something of that variety. It would not be counting on prices to go up. And as neutral to bearish as BTC looks, MSTR to me definitely looks bearish. Now, again, this does not need to or have to break down. It's a spectrum. Does this look more bullish or more bearish? On the spectrum, it looks pretty bearish. On the binary scale, it looks very bearish to me because this could be a head and shoulders. This could be a 4-hour TK cross. This is the first bearish TK cross on the 4-hour since the breakout in September. Will they get into the queues? If they don't, what happens? You know, there's some news and some catalysts here, definitely to watch for, that could bust this wide open in either direction. But if I didn't know anything about anything, I'd say, yeah, this looks bearish here. Is it a short? Again, I'm not going to short a bubble. I'm not going to short a cult. That doesn't make any sense to me. You just don't have to participate, right? I mean, it doesn't look bullish to me. I'm not going to celebrate when it breaks down. I'm not going to say I told you so. It just doesn't look bullish. That's it. And then the miners have been absolute multi-month brutality volatility. It's just endless chop. I think for the miners, you know, you just have to have some idea of what you think is going to happen here in the next year or two and kind of set it and forget it. Because this is very hard to trade, especially on a day-to-day basis. It's had some pretty decent signals, mainly towards the bottom of this range. Inverted head and shoulders here, inverted head and shoulders here, Eve atom, the rare Eve atom down here. Up here, maybe cup and handle, you know. I don't have many great ideas up here for the miners. Before I go any further, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to our trading style. You can check out Kraken Pro at the link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to US and US territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. And looking at some alts today, Sol looks like it wants to come home. It does not look bullish at all. Where does this go? 200 seems reasonable. If we just measure anything here with fibs, you get basically 200. It just looks a little tired, and it's certainly not bullish. That is, it is getting denied underneath the Tenkan here over and over and over again. That's like a week straight of denials. I just wouldn't expect anything bullish in the near term for Sol. Long term, cup and handle, whatever, right? You know, but this week, I wouldn't expect mega continuation. ETH as well, certainly a rising wedge candidate and trying to break down here. Volume also hasn't quite picked up yet beyond what we've seen. So that might signify a breakdown yet to come. Again, I'm not turbo bearish here. I just don't think going up is the path of least resistance. That's all. For the macro side this week, we have CPI, and that's kind of it. I mean, we have PPI, but the big one's CPI. So my question here for crypto is, are people de-risking ahead of CPI, which could be happening? I think it's consensus that CPI is going to be elevated month over month here. The year over year number is going to be rising. So I hope the market is aware of that and doesn't get freaked out by that information. Based on the rates probabilities, we are effectively pricing in 100% chance of a cut at this point because we're so close to the meeting. It would be unusual if this were to flip from a cut to a hold or a cut to a hike 10 days before the meeting. Now, if CPI is extremely elevated, which I don't think will be the case, but if it's like 3+, then that may flip this significantly back to no cut. But as we stand here, this is Truflation. Truflation has gone straight up like a rocket ship since they started cutting, but it's not at 3. And even for the prior month, it was not at 3. And you got to remember, we're getting numbers tomorrow, or numbers this week on what happened last month. So you're kind of living in the future by looking at the real-time data. It is concerning that the real-time data continues to rise. And we're clearly not at the Fed's 2% target, but they're likely to justify this by saying they're continued to be worried about employment and the jobs market. If we look at the nowcast, this is also rising month over month. Last month, the print was 2.6. This month, it'll be 2.7. December's print, 9 days in, 2.82. So that is what they say, headed in the wrong direction. So if there's anything that's going to make risk assets maybe mad, it's that the path of the Fed going forward being a little bit more murky. Now, we've already sort of priced out aggressive cutting, but we may further price out cutting here into 2025 if inflation's on the rise again. And then the Fed has to decide, do we want to fight unemployment or do we want to fight inflation? But the obvious choice is definitely getting more difficult with inflation rising on a month-over-month basis. Something else that's making this more difficult from a QE versus QT perspective is liquidity in the system effectively. RRP represents this inert pile of capital that can be used for liquidity purposes, but if it's empty, then that's where liquidity may run into a snag. This, along with bank reserves, important to consider. Is there some sort of seasonal tax thing going on here? Is this low enough for the Fed to get concerned? It's the lowest it's been since April 2021. But if there's anything that's going to get them to flip from QT to QE, it's going to be this, and it's going to be worrying about bank reserves. And it may take a bank becoming insolvent first for them to act. I don't know, but they are kind of guessing as far as where they think adequate reserves are. But the reverse repo is definitely running on fumes here. So if this continues to get drained towards the end of the year, we may see some interesting activity in 2025. And if they do flip from QT to QE, that's only going to fuel inflation more. And again, it's just that the right thing to do becomes very difficult from an obvious answer standpoint. Looking at GDP now, we are above this graph. We're at 3.3 and just continuous lift here in GDP. So certainly no signs of recession on that front. The yield curve has flattened out a little bit. You can see the short end falling. This is the lowest the short end's been all year. It is flirting with correcting, across the curve. So some of the curve is uninverted, some of the curve is inverted. And if we just look at the 10-2 comparison, we are uninverted. We don't really get recessions until after we are uninverted. 2020 was certainly a recession. I'm not sure why that isn't highlighted, but the doomers like to highlight this, whereas the creator of this indicator likes to highlight the 10-year 3-month, which is still inverted. So this is a little bit in the weeds, but yes, this certainly isn't to be ignored going into 2025. But we've got a lot going on here as far as issuance and general expectations of what the Fed's going to do under a Trump administration. The unemployment in the yellow there did tick up slightly, almost to 4.3 on the rounded number. And if Powell wants to defend a cut, he's probably going to be pointing to the labor data rather than the inflation data. Across the bond complex, TLT, IEF, SHI, AG, I don't see a great trade here. I don't see a great setup here. Everything just looks kind of choppy and flat. TLT has pulled up quite a bit since around 90, but none of this looks directionally relevant here just yet. Definitely something to watch this month if we get a cut. How does this react to the inflation numbers? How does this react to unemployment at the end of the month? And if we look at the meetings, the next meeting isn't until the end of January. So a lot can happen between the 18th and the end of January. The dollar to me in a vacuum looks bearish because this looks like Seoul. It wants to go home. It wants to go to 100. It wants to break down. This looks like a head and shoulders to me. So that's good news for crypto. It's going to need some juicier crypto is to keep it elevated because it's looking a little tired. So a boon for BTC would be the dollar pulling back down. We don't need to go straight to zero, but just obvious weakness should be helpful for crypto. For the indices, for the S&P, for the Qs, for IWM, they look fine, right? There's not much really to say. Trend is bullish, has been bullish for a while. It doesn't look like we are immediately at risk for a drawdown, while at the same time, if we pulled back to 5,900, we'd still be well within the uptrend. We'd be well within the top side of the cloud. There's really no issues here. It's not necessarily complacency. It's just a channel. It's just a rising channel. And we've seen this over the past year. Just an endless wall of money passively buying. Q's the same. They look fine. They look fine. I have nothing else to say other than trend is bullish. That's it, right? Not really a setup here, but you can see the same trend channels as the S&P. IWM probably has a more actionable setup with potential breakout here above 225. Even if this pulls back to like 224-ish or lower, probably fine going into 2025. Maybe not the greatest setup as we sit here today, but if I were just trading the technicals, it would be IWM over S&P and the Qs. Probably a terrible decision, but that's what it would be based on the technicals. SMH also looks tired. NVIDIA to me looks like a head and shoulders. I'll get to that in a second. This whole thing could be a head and shoulders. It just doesn't look like a bullish setup, right? You don't always have to be doing something. It doesn't always have to look bullish. it's okay if it just does nothing or chops around. This would have to get above 260 for me to care. But here I don't see anything tradable at all whatsoever. IGV also has this rising wedge, kind of like ETH. You can see the MSTR footprint in here. MSTR is in IGV on a small percentage of the holdings. This looks okay. How much more can you expect in the near term? I don't know. But the trend is certainly very strong. And losing 104 would probably be a good trailing stop loss here. I like the higher time frame, cup and handle into 2025, just sort of set it and forget it. Come back to it towards the end of next year. And I certainly like this chart over SMH. As far as the Mag 7, Amazon looks incredible to me. Amazon, we'll get to in a second. That chart looks like the obvious choice here of the 7. Apple with a honorable mention. It does have a ascending triangle breakout. It's above the cloud. Target's higher, right? This is all good news for most people because most people hold Apple in their 401k or whatever. So this looks fine. You know, the risk reward here is not as good as it was at 232, but it looks bullish, certainly. This is NVIDIA on the daily. And again, you don't ever have to do anything. But if I see this, my immediate instinct is not, oh, hey, this looks like a great long setup. My instinct is, hey, I'm going to leave this one alone until we figure out what's going on here, potentially back to 120. And that would certainly hurt SMH. The last time I was actually bearish on NVIDIA may have been here with a double top, but the other time was back here. This was 2023. This was a stronger case for head and shoulders. And this broke up. This broke through the right shoulder, held above the cloud, and the rest is history. So that's what you need to watch for on this low time frame case if you're bullish NVIDIA. But you'll see this type of activity happen all the time. It tends to play out more on higher time frames with longer consolidation periods. That's certainly why this looks a lot more real to me than whatever this is. But it's not there, as I like to say. And here's Microsoft, and I've been bearish on this for months. Now, it hasn't gone anywhere, to be fair to Microsoft. But like the NVIDIA case, like the SMH case, this is actually broken up above 440 or whatever that is. It made a higher high. So it's effectively negating any bearishness that I've had. It looked like it wanted to break down and never did. It never broke support, it never broke 400. So along with Apple, this chart looks okay here, right? It's like, okay, we spent literally the entire year making a bearish pattern and then never broke down, right? There's your answer, right? So along with Amazon, I think Microsoft is okay. Meta, I don't really see anything here. It looks fine, probably on high time frames. But if I'm trying to pick a couple out of the 7, it's going to be Microsoft, it's going to be Apple, it's going to be Amazon. Netflix, I have no clue. This thing just goes up forever. Honestly, it's in a permanent multi-year trend channel. What else is there to say? It might ping pong back and forth here, but it's fine. You know, I don't like it here as a setup versus this chart. I mean, this chart looks like IGV. It looks like any other cup and handle you're ever going to see. It looks like any inverted head and shoulders thing, monstrosity. Uncle Jeff stopped selling at 200. Into the end of 2026, Amazon at 500 wouldn't be so insane, just based on the technicals. Most of the Mag 7 has done laps around Amazon for years. And if AI, productivity, whatever, right, pick your narrative, might be Amazon's time to shine. But the technicals are certainly there. This looks very, very good into 2025. Definitely a long-term play. Google's another one. Doesn't look like much of anything, honestly. It doesn't look terrible here. Certainly has decent upside. And it looks okay. So the Mag 7, aside from NVIDIA, really look fine. I just think there's better trades to be had within the Mag 7 on higher time frames. And it's probably just a matter of personal preference. But Microsoft, Amazon, and Google, you know, they're not going anywhere. Tesla, on the other hand, it's a lot like ETH. You know, it was down, it was flat, it was just a dog for most of 2024. Bounced a lot. Now it bounced even more post-election. It's hitting the measured move targets of the year-long scoop-de-whoop thing here. 400, 500, certainly within reach here. I think that's an all-time high soon for Tesla. So the risk-reward in the near term is kind of gone. It came and went, right? You know, if you missed the breakout of 270, that's it. So I still like Amazon more favorably over Tesla. Over the weekend, we had some China stimmies news, and that has lifted KWEB up again. I don't think I'll ever take a trade on KWEB ever again, just because it's choppy and it's China and it's just hard. It's just hard to get a read. But this does look like it's trying to break out again. So if you wanted some international Chinese internet exposure going into a Trump administration, sure, why not? I just don't know if that's really where you want to be. But as a contrarian play, I don't hate it. It's been flat for 2-3 years. This is like Square, where Square broke out and it's on its way to its measured move target. And then lastly, EVAV, I talked about this one a couple times over the past month, and it has done really well today off of the China stimmies news, coming off of a falling wedge plus a multi-month inverted head and shoulders, and it's a trade, right? It's got positive risk reward with some upside in it, and this is how I'm getting my Tesla exposure. So I still think stock pickers are going to outperform the indices, even though the indices look fine. I just think there's some very decent and interesting setups here as we go towards the end of the year into 2025. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.